Okay, I'm sorry for that delay. We're still working on fixing a couple of the technical glitches that developed earlier in the week. I think we've got a lot of it straightened out now. This is the Anderson Report, Wednesday, August 19th. And I am Tim the Source Anderson. This is my YouTube channel. Welcome, everyone. I certainly appreciate everyone's support, especially with the technical issues we had earlier in the week. Couple of interesting things to talk about today. But first of all, this is my YouTube channel. If you have not yet subscribed, please hit the subscribe button. Hit the little bell next to it so you can get notifications on when the next broadcast will be. And just checking one thing here. And also hit the little like up arrow on the broadcast. So, markets faded a little bit during the last hour of the day today. I don't think it's anything terribly alarming. Maybe just a little bit of a minor wake up call that I see no one in the chat, even on this. Excuse me. Okay, so excuse me, we've had some technical glitches with our chat. I think the chat is a big part of the show. I really appreciate the questions, the comments, and the topics that people want me to address. Earlier in the week, I realized that actually after Monday's broadcast, I realized that Sunday and Monday, I there were plenty of people in the chat, although I could not see any of it in on the side of the broadcast that I look at on our streaming provider. And so now what I've got is I've got a my tablet down just in front of me with the broadcast. John, yes, thank you. Thank you for at least saying hello so I know that the chat is working. And thank you for John has been one of our more loyal supporters since the beginning. We've been doing this now for about 5 weeks, kind of feeling our way around the the YouTube sphere and everything connected to it. But this is my YouTube channel, The Anderson Report. On Periscope, it comes through as TJ Anderson 12, and my Twitter handle is TJ Anderson 1. So, um, of course, you know, as we go forward, we'll always have little glitches and issues that have to be addressed. I think we've got that figured out right now. So we will proceed. Markets sold off in the last hour. Um, I don't think it's anything alarming. Clearly, the NASDAQ had made new highs 2 days in a row. The S&P 500, after having a well anticipated, is today the day, is today the day for the better part of a week that it was going to make a new high. Finally, yesterday, almost 6 months to the day, made a new high when it closed at what was it, 20s? It closed at 33.89 or 91. I think it closed about 4 or 5 points above its prior high, which was 33.86 from February 19th, which is exactly 6 months ago on the calendar. So today, the Dow is down about 85 points. All that selling was in the last hour. Um, we'll get into possibly why in a couple of minutes. Uh, a small percentage decline of a third of a percent. The S&P 500 was maybe it got up to 33.95. People were talking about it maybe closing above 3400. That didn't happen. It was down 15 points at the end of the day to 33.75, a decline of less than a half of a percent, but also below what was the prior high of 33.86. So we'll see if that S&P closing yesterday at an all-time high turns out to be a one-day wonder, or if this is just a little some well-deserved profit taking, and we'll try to build on all the gains the S&P has made this quarter. NASDAQ had also was up a little bit right out of the gate, uh, gave some of that back, weakened during the last hour, down a little over half of a percent, but still 11,150, a little bit less than that, just below 11,150. Clearly, the NASDAQ has very strong gains quarter to date, close to 10%, about halfway plus 1 week, halfway plus 3 days into the third quarter. The transportation average um, down just fractionally also. Actually, I think I've got that wrong. I think it was up just fractionally. 10,883, up about 2/10 of a percent. The airlines had a little bit of a bump today as uh, Southwest Airlines said that they were encouraged by signs that they see for August booking of flights. I don't know if that means booking of flights that are to take place in August, or the volume of flights that they saw booked in August, maybe for August and also more into the fall and later in the year. Airlines had a nice move about a week and a half ago, and then they gave some of that back. They had a headline a couple days ago that there's risk of 75,000 jobs in aggregate to the airline industry, and that um, caused a couple days of weakness in the airline sector. And today they were up just a touch. We'll see if any other airlines tomorrow make encouraging comments like Southwest Airlines did today. The Russell 2000 had a pretty good rebound for almost all of the day until that last 45 minutes. Again, yesterday there was probably a allocation trade in the market where at least one big fund was selling the small cap sector and buying maybe a number of other things. The small cap sectors had a pretty good run off its very strong run off the March lows, and a very strong quarter going on so far, up close to 10% quarter to date. So it's very not terribly surprising that maybe a big fund, a relative value fund out there said, look, there's still some risk to the economy. We don't know if when the employment picture is going to take its next leg higher. We don't know how soon we're going to come out of this virus and how many companies are going to continue to be hurt significantly by lower capacity constraints and any type of indoor activities. So there was a big asset allocation trade, not among asset classes, but really among sectors in the equity market yesterday that caused the Russell to go down quite a bit. That had reversed yesterday. The Russell was up close to 1% for almost all of the day. Gave back a good chunk of that during the sell off in the last 45 minutes. Still up about 3 points. That's about one. That's about a little less than 2%. Now, the breadth of the market certainly was not emblematic of a very distressing sell-off. Advanced declines at the NYSE were negative by 3 to 2. We had a little bit less than 1,800 advancers. We had a little bit less than 1,200, 1,800 decliners, 1,200 advancers. That's three issues down for every two that are up. But again, the Dow was only down 80 points, and that's only a third of a percent. NASDAQ composite, for the NASDAQ being down over 0.5%, really 0.6%. On the NASDAQ, for every three stocks that went up, four stocks went down. So that's really a little bit less than even, not really a big alarming difference. Although I will say that many times when you get a sharp move, either to the upside or the downside, that takes place largely in the last 45 minutes to 1 hour of the last 1 hour of the day, the advanced decline stats might not pick up to on that until the following day. So we're going to watch the breadth numbers very carefully tomorrow, especially if there's any follow on selling from what we saw in the last hour today. In addition to that, gold, everybody's been watching it. It pulled back a touch, but it did hold the 2000 level. These are the gold futures. It went out at 2002, down $10. It was up $20 yesterday. I just feel that there's still a lot of interest in gold for people that got into it really early and had been sitting with it for quite a while before this move started. Sure, they're going to take some, there's going to be some selling on strength. There's going to be some buying when it pulls back. I just feel like this story in gold is not over yet. Silver, very much unchanged, but on the silver futures, holding the $28 level, that's a level that very few people would have thought was in the cards before the end of the summer, even a month ago. Okay, so oil. We talk about it almost every day. It was down marginally, 1%, less than 50 cents. Crude oil settled at 42.40. So 3 days in a row, I think every day this week it's been above 42. I view that as positive. The energy sector certainly didn't reflect it. It was down 1%. We have mentioned over and over and over again that the energy sector does not always trade with crude on a day-to-day basis. Yeah, okay. Crude oil was down 1%. The energy sector was down 1.1%. I'm looking at it from the perspective that crude oil is at 42.40, 42 and a half. It's positive that it's holding that level, although it was down today. And on a percentage basis, the energy sector was down a similar amount. But my feeling is the energy sector has been underperforming the move in crude. Hello, Maddie. Thank you for joining us this evening. Maddie Adams has been a big supporter. We really appreciate all of her comments and support. John, the FOMC, yes, we're going to get to that. They did, these were the FOMC minutes that were really done at the last Fed report, which was probably, let me see, 3 weeks ago, maybe. And they were cautious, but we will get into that in just a minute. So We mentioned the energy sector was down. The real estate sector was down. All this talk about maybe Amazon is going to take over the mall space, a lot of empty mall space. Any of the mall REITs have to be really hurting. I'm sure that Amazon, as much of a budget conscious organization as they are even if they do take up some of the space in the malls that used to be Sears or Kmart or other big retailers that were anchors of some of these malls that have now closed up and abandoned, Amazon's not going to pay anywhere near the rent that the uh, Sears, Kmart, or other anchor retailers paid it for that same space. We'll see how the mall operators deal with that. It's certainly it's good for them to have a an occupant, but they're not going to be paying what the traditional retailers are paying. Um, Consumer discretionary down 0.7%. Consumer staples down 0.7%. Consumer discretionaries were up 1.5% yesterday. We mentioned it was a little bit of an inconsistency with some of the cautious comments we heard from Walmart and Home Depot. And since we mentioned Walmart and Home Depot, let's look at the earnings that we had today because there was one standout performer that just blew the doors off their earnings estimates on both top line and bottom line numbers, and that was Target or Target, as some people refer to it. So, Target earnings Q2, earnings per share $3.38. The estimates were $1.60. That's a twofold beat. It's almost unheard of to have a beat like this against consensus. Their revenues 23 billion. The estimates on their revenues were for 20 billion. That's a 15% beat on revenues for Target. That is almost unheard of. Their e-commerce business up 200%, obviously coming off a very low base. We mentioned yesterday that Walmart reported yesterday morning their e-commerce business was up 100%. Again, they have had nowhere near the impact in e-commerce that other retailers, obviously Amazon, have had. And so they're coming off a very low base, but it's still, look, for them to be growing at 100% is encouraging, no doubt about it. But you have to put in perspective that it's coming from a very low level. So I think that it's interesting because the disparity from estimates for Target on both their earnings per share and on their revenues for this past quarter is a lot of what we would have expected because of how difficult it would have been for analyst consensus to really forecast how significant the shutdown was and how significant the rebound was. And for a lot of companies and a lot of economic indicators that we've seen over the last 6 weeks, we haven't had these wild discrepancies off consensus. For Target, we certainly did. Target had been at a 52-week high earlier in the week. It's a $145 stock. It was up 11 points today. I'm going to say, look, I'm sure by the end of the day, it was up well over 5%. If it held that 11-point gain, I honestly didn't look at it at the very end of the day. 2 o'clock, 2:15, 2:30. That was before the sell-off. I think Target was up about $11 to 148. That would have been about a 7.5%, 8% gain. I'm sure it was still a 6+% gain by the end of the day. Very, very impressive. Okay. Um, so Lowe's reported also. They had solid numbers, nothing to the extent that Target had, but they had a very good report. On the negative, TJ Maxx did not have a good report. They had a miss on earnings. They had a miss on revenues. Clearly, it's a collection of brands that are, yeah, what the polite way to say it is, but a little bit beat. The stock was down 5%. Now, in the tech space, those were all reported before the earnings. After the close, NVIDIA reported. NVIDIA is a hot chip manufacturer, a hot um, uh, like motherboard processor, uh, graphics driver, graphics devices for computers. Clearly, with a lot more people doing video conferences from home, Zoom calls, and Skype calls and Microsoft Live calls taking the place of in-person meetings and conference calls. A lot of people have upgraded their home computers, bought new laptops with better processors in them, maybe bought desktops. Companies have upgraded their graphics capabilities for uh, uh, virtual conference calls to make them seem as much as possible like being there. Nvidia's just in the right space for all of that stuff, and their earnings showed it today. Um, Oracle, kind of a different tech company, but a big player in the space. A little bit more with just the business to business crowd than the individual stuff. Talking about maybe buying TikTok, a very interesting move. Larry Ellison's a visionary guy. He's extremely entrepreneurial. He never really, he's an unusual type of a personality to be running a monstrous company like this, but he's been very good at it. Uh, it would be fascinating to see what the scenario would be, how it would play out if Oracle ended up being the company that bought the carved out version of TikTok that included all of their U.S. distribution and customer base, Australia, New Zealand, et cetera, carving everything out away from that that's tightly controlled and, and intertwined with China and the Communist Party of China. That in and of itself is a daunting potential feat. I'm sure Larry Ellison has the technical capability to figure out what's required in doing that and what the timeline would be in doing that. The other players, obviously, that everybody's been talking about for the last week and a half, Microsoft, Twitter a little bit, but I don't think that's going to happen. Facebook, maybe Apple, maybe Google, but really, I think Microsoft and Facebook have been the inside baseball leaders on this TikTok transaction. It would be fascinating to see um, Oracle get into something like that. Okay, so gold getting hammered in the futures market currently. Well, John, I haven't seen that. I didn't look at it just before the show started. Um, I don't have, but I will look into that later. And if there's anything that I can see really substantial, I'll make some comment of it on Twitter. I didn't see that gold was down sharply after 4:30 or 5 o'clock, and I did not look at it in the last 45 minutes before the broadcast started. Um, so today the market was really acting pretty well uh, until about maybe 3 o'clock. It had one little hiccup down and then recovered and then sold down sharply during the last 45 minutes to an hour. And the Fed minutes came out at 2 o'clock. So it's, of course, natural to think that what the Fed said in their minutes were alarming to some investors, enough to make them cautious to where they wanted to take some chips off the table and, take another look. Although, look, the declines were not severe. The declines really were not alarming unless you've been conditioned to the market grinding higher almost every day, holding its gains during the last hour of the day, and then by 4 o'clock having uh, a fractional to moderate gain across the major market averages, to where the NASDAQ could have posted its third consecutive all-time high. The S&P could have added to its all-time high from yesterday, maybe threaten the 3,400 level. Sometimes it's just not that easy. We've had a pretty consistent grind higher. I wouldn't even call it a run, not like what we had in parts of July, when we had sharper, not quite explosive, but we had bigger gains day after day. Here we've been grinding up 2%, up 3%, up 4%, et cetera, et cetera. Maybe with one of the averages pulling back a touch on that day. But overall, over the week, over the 3 or 4 day span, everything's higher. Today, things were a little bit lower. And of course, the Fed did release its minutes um, at 2 o'clock. So what did they say potentially that could have given investors some caution? They definitely were not exuberant in what they said. They weren't all systems go. They weren't, the economy is well on its way to completing a V-shaped recovery similar to what the stock market is doing. But you've got to realize that that's not the Fed by nature is a very conservative organization that's just always going to be kind of like the voice of reason, or the sober guy in the room that's going when everybody else is slapping high fives and talking about how great it is that the market's going up every day. The Fed is going to be kind of like, yeah, but maybe we have to worry about this. Okay. That's just kind of what the Fed does. And they have demonstrated that over and over and over. They're going to be, they're not going to be the voice of doom on the way down, and they're not going to be the drunken sailor on the way up. So, what did they say in their minutes? They said that, just to paraphrase, that kind of the main thing was that the health crisis, they called it. We know what they're talking about. They're talking about the coronavirus pandemic, and then the ensuing uh, self-imposed economic shutdown that was, of course, caused by an abundance of caution to help prevent the totally widespread, out of control uh, explosion of the virus everywhere, even to a much larger extent than what we saw. And that caused a lot of economic disruption. So the Fed said that the health pandemic, health crisis would weigh heavily on economic activity in the near term and pose considerable risk to the economic outlook in the medium term. Well, I don't think anybody would terribly disagree with that, although it's it's different than what the market has been telling us a little bit, although the market could be looking out 3 to 6 months. Uh, and clearly, there are sectors of the market that have become very large cap com- companies with a much higher capitalization than they used to have that have been beneficiaries of the shutdown. But that does not mean that there is not still tremendous economic dislocation in parts of the country and among certain industries. Obviously, anything to do with indoor activities, if we've mentioned it over and over and over again, restaurants, bars, hotels, airplanes, sporting events, schools, anything that is emblematic of what used to be considered just normal American life has been disrupted. So, look, the Fed has a long history of being cautious and erring on the side of caution a little bit with some um so you know a couple questions here. Why is the US dollar up? John, yes, the US dollar hit a 2-year low against a basket of currencies 2 days ago. Today the US dollar was up. I would say it was a almost a knee jerk reaction on a um, from an very oversold condition. The dollar's been down, relentlessly beat like a rented mule, some people would say. It was up a little bit today. I wouldn't read a whole lot into it yet. I think if we saw, um, 2 to 3 weeks where the dollar tried to make, you got to realize currencies trend for long periods of time, and they're not going to reverse that trend in a couple of weeks. It's going to take it takes longer periods of time for currencies to reverse trends that they've been in than it does stocks on occasion. So let's watch the dollar. Let's see if the dollar goes up tomorrow, goes up Friday. Let's see what the dollar does next week. Let's see what it does after the September employment report. I think the dollar's been due for a little bit of a bounce. It was up today. Um, I, I I would doubt that that's maybe why gold is down if it's down a lot after hours. And then your next question is, am I the only skeptic on Alibaba's earnings? I have a tough time believing. Well, yeah, John, I'm not at all. Aside from the fact I'm not a registered analyst and I can't really get into individual companies, I'm not up on Alibaba's earnings at all. I think Alibaba has a great franchise in Southeast Asia, potentially a great global franchise. They do astronomical amounts of business. Um, the issue with the Alibaba, it's not even an exchange traded fund. I think it's not even a American depository receipt. I think it's a American depository share that's listed at the NYSE. Uh, there are absolutely no voting rights connected to it at all. If you really don't care about that, that's fine, but it should always trade because of that. Aside from the fact that the company is probably to some degree connected to the Chinese government, although maybe not as much as some, but people would argue that point. Um, you're just not going to have voting rights if you buy the Alibaba ADSs that are listed in New York. Even if you bought the ordinaries in China, if it's heavily connected to the Chinese government and the Chinese Communist Party, any voting rights that allegedly you'd be getting probably would be moot anyways, if push ever came to shove. So the Fed, look, the market had a reaction the last hour of the day. The Fed's comments were very cautious, leaning toward the fact that, you know, the, but you have to realize that they caveat everything they say fairly thoroughly. The health crisis could weigh heavily on economic activity in the near term and potentially pose considerable risk to economic activity in the medium term. They're not quantifying it. They're not saying it's a game changer. Clearly, the whole thing with the pandemic and the economic shutdown was the game changer. There's no doubt about it. But we get a cure for the virus that's universally accepted as a reliable cure for uh, a large proportion of the people that have been infected with the virus. And it may take different cures depending on what some people's como uh, mobilities are. I'm not saying that word right, but you know what I mean. Depending on what people's other health considerations are, it may take a couple of cures. And if we get a vaccine or a couple of different vaccines, then that's a game changer, because then that would exponentially speed up the process of people feeling more comfortable to go to restaurants, go to social events, go to indoor activities, go to, maybe we'd get sporting events open back up to audience participation, uh, increase airline traffic. Okay, the TSA numbers came out today. I mean, I'm not going to mention them specifically. I don't have them exactly right in front of me. But so today's Wednesday. Tuesday's a very low travel day of the week. The numbers versus Tuesday of the prior week were up just fractionally. I mean, maybe up 1%, maybe a little bit more. But it, which is why I was very interested to see the comments from Southwest Airlines that said they're encouraged by the bookings in August. What I would like to ask them is, are those bookings in August for flights in August, or are they bookings in August for between now and the end of the year? Maybe we'll get some clarity on that over the next couple of days. So, the Fed, look, the Fed made these cautious comments. The Fed, when the market gets a little overheated, the Fed's going to say some cautious things. One of the most quoted comments by a senior Fed official or Fed chairman was when Alan Greenspan was in the when the market was just exploding with really the early innings of the internet revolution in 96. And the market was, and that was having a major impact on increased productivity in the workforce. In fact, Greenspan said after he retired as Fed chairman that the one thing he missed the most about the market rally and the economic strength of the 1990s was how much the increases in unprecedented increases in productivity sparked the economic progress that we had and the unprecedented gains in GDP. But he said in a speech very famously at one point in time in 1996, I believe it was in December, he referred to the the irrational exuberance of the stock market. Now, for 1 or 2 days, the stock market didn't take it kindly. In fact, it traded down very sharply the following day, and it hit a circuit breaker on the way down and stopped trading after 2 p.m. and did not open for the rest of the day. Now, 3 or 4 or 5 days later, the stock market was higher than it was the day before he made those comments. So it didn't have a lasting effect. But his irrational exuberance comments will be quoted and talked about for a zillion years. So the Fed is always the voice of reason. They're always going to be the designated driver. They're always going to be the sober guy at the party. In fact, one of the most famous Fed quotes ever was from a guy who was the longest serving Fed chairman in the history of the Federal Reserve, which was started in 1913. And that was William McKesney Martin, who was the Fed chairman from it was almost 20 years. It was just after 1950 to 1970. And he obviously had a wealth of experience of dealing with a lot of different types of people. I think he was the Fed chairman under 5 presidents. Okay. And he very famously said at one point in the presentation or a dinner somewhere that the Fed's role is to take away the punch bowl just when the party is getting good. So basically, what that means is when the economy is starting to get a little bit overheated and everybody's having maybe just a little bit too much fun, the Fed is going to throw cold water on it a little bit. Okay. When, the economy is in the tank and things look like the world's maybe going to come to an end, the Fed is going to say, look, I wouldn't worry about this. We've got a lot of tools in the toolbox, and, we're going to do everything we can to avoid the total implosion of of the U.S. economy. So they're a buffer. They're a buffer. And they're always going to err on the side of caution. They did that today. They made some very cautious comments about how the virus situation is going to affect the economy going forward. And a few people in the market hit the pause button. Now, that being said, I've been concerned that the breadth has not been great. The leadership's been a little bit queasy. The financials could not follow on to the move that they had a week ago and pulled back to the point that they were almost where they were a week ago, Thursday or Wednesday or Thursday, before they had a nice 2.5 day rally. They gave almost all of that back. Energy is not really performing like it's at all on the cusp of being a leadership group. Tech has had a very, very explosive move, and there's a couple of signs here and there that maybe they're a little bit tired. Clearly, with NASDAQ up 23% year to date and 10% quarter to date in the middle of the third quarter, you can't expect those gains to be replicated the second half of the third quarter. So, the market, there are some signs that the market has looked a little tired. And I didn't mention it earlier. John, I'll get to your question in a minute. But I didn't mention it earlier that also Apple intraday today hit a price level that would have recognized a $2 trillion market cap valuation for Apple. And within seconds, every financial news commentator was talking about it. And it was the chyron on all of their shows for a good chunk of the middle of the day and into the early afternoon. But look, it didn't close there. Today at 4 o'clock, at 5 o'clock, at 6 o'clock, at 7:45, Apple is not a true $2 trillion company. So I understand that it got to a price point at one point in time during the day. Okay. But if anyone would have tried to cash out at that level, you would have gotten execution on 1/1000th of your order and a nothing done on the balance because it didn't stay there for that long and it didn't close there. And it's not a $2 trillion company at the end of the day. So I realize if you're in the financial media, you have to mention it, you have to make a big deal about it. But the same way they talk about uh, the Dow going through a big level, the Dow going to a new high, the S&P hitting a new high. I heard the S&P hit new highs 4 or 5 times last week, and it didn't because it didn't close there. Okay, it's got to close there. If it doesn't close there, it really doesn't mean anything. In your opinion, who has been the best Fed chairman or the best of the worst? Um, that's a John. That's almost that's what I would call almost a three vodka conversation, and I haven't had one vodka yet. Um, but I would say that Greenspan was masterful at some things. Okay, Volcker had just a tremendous amount of guts. I won't say what he really had, but he had a tremendous amount of guts to do what he did when he stopped pegging interest rates and started pegging the money supply and then put credit controls on because basically that forced inflation, that forced the break in inflation. Um, you know, a lot of people saw it on Greenspan late in his term. And I think that when you hear him comment today, I think I mean, you can tell he's well past his prime. I mean, look, he's 93 years old. Okay. Um, he's a brilliant guy. He was in that circle for 50 years. He ran a company called Data Resources Inc. before he was involved in the Council of Economic Advisors in the very early 70s. Um, and frankly, I think that Powell, what I really like about Powell is that he is not a PhD economist. He is not totally from a world of economic academic economic models, particularly working in a research group within the Fed, then becoming an assistant to the director, and then eventually becoming a Fed president, and then et cetera, et cetera, et cetera. Like so many of them have spent 30 or 40 years with the Fed. So I think that Powell coming from industry is really kind of like the right guy for this time. Now, clearly, he's not the best communicator of the group. You know, I mean, he should. Um, he's better than he was during the first year, but I would also say that uh, to be fair, all Fed chairmen have challenges communicating what they want to communicate during the first 6 to 9 months or the first 6 months to a year of their tenure because everything they say, every word, every placement of every comma, every omission of a word from the prior statement is micro analyzed to a ridiculous degree. But I do think that I like Powell. I think he's the right guy for the moment. He's clearly comes off as, I mean, let's be blunt, kind of a boring guy. Maybe he is. But he's in touch. He has a better feel for what really goes on in the economy and in the industrial world at at, at the in the industrial sector and in the business sector, probably because he was very involved in that, as any of them. Okay. Bernanke was a great communicator, but I have issues with a lot of things he did around the time of the global financial crisis and after. He also made some statements, in the first 3 or 4 innings of the mortgage securitization mess that it was uh, limited to only very high risky, uh, very high yielding mortgages and very high risk mortgages. That turned out to be not nearly the case at all. Um, but, it's a long, long, long conversation. No boring than Yellen. Well, Yellen was a career Fed person. I mean, you're talking about, look, you can go to One Fed Plaza 4 or 5 blocks from the New York Stock Exchange right now. There's a ginormous New York Fed building with, you know, 20-inch brick walls that was laid in probably the late 1800s. And there's 300 to 400 PhD economists in there that do nothing but run models on different scenarios of the economy, what could happen if. So, these are career academics. And I like the fact that Powell was not a career um, academic. Um, you know, I kind of brush off all of Trump's um, criticisms of Powell, his vocal criticisms. In a perfect world, I would prefer that Trump just not comment on the Fed chairman at all. I know he does that because that's his shtick. He's just going to always do that. And I think the people at the Fed take it much more lightly than they would if it was another president who almost never commented on the Fed. I really don't think it affects them at all. But that being said, every president from, you can go all the way back, you know, have had internal battles with uh, the Fed chairman. Most of it, the difference with Trump is that almost all of the presidential disputes with the Fed have taken place behind the scenes. And with Trump, almost nothing takes place behind the scenes. Behind the scenes. So, all right, look, it's almost 8 o'clock. I certainly appreciate everyone's support. This is the Anderson Report. We're 50-50 on a show for tomorrow. If there is a show tomorrow, it would most likely be at 9 o'clock, not 7 o'clock. Um, and I know that the weekly jobless claims numbers are going to come out tomorrow. I think they will be followed very closely. I think some people would like to see follow through on the downside to where last week we broke that 1 million barrier on the way down with a 965,000 reading on first time jobless claims. If we could get that down below 9, down below 850, closer to 8, it would just be really uh, constructive and make people feel like we're starting to turn the corner on the employment picture of the economy. But we'll see. That's at 8:30 tomorrow. If I have a chance to tweet about it, I will. Um, I'll put out on Twitter whether or not I'm going to have a show later in the afternoon. And Friday, probably not. Sunday night, definitely. And everyone, I think the market is, we got to watch the market here the next couple of days. Hey, we could sell off for a day or two and then get it out of our system and then, rebuild and be okay. Uh, it's low volumes right now. It's coming into the end of the third week in August. The fourth week in August is going to be low volumes also. This is prime uh, vacation time for a lot of the movers and shakers. But we're 80 days from an election, and there's very few dull moments out there in terms of the whole sphere of what I call the eco political ramifications of news, data, stock market, statements from people, et cetera, et cetera, et cetera. So we'll see how we go. Everyone have a very nice day tomorrow. I'm 50-50 for tomorrow. If it happens, it'll be at 9 o'clock. I'll tweet out and let everyone know. Otherwise, have a great weekend, and we'll talk to you. If we don't talk to you tomorrow, we'll talk to you Sunday night. Thank you very much.